In this video we are going to discuss about technical analysis. Technical analysis is basically technical indicators that are used by traders to predict the trends of a market. This video is divided into 3 parts, and all parts are connected with each other, so don't see third part first. I found 7 indicators for prediction of trends. First, on-balance volume. First you understand what is volume. So volume is total number of shares traded in a specified time frame. Use the on-balance volume indicator to measure the positive and negative flow of volume in a security over time. This volume is totally based on up volume and low volume. Up volume is how much volume there is on a day when the price rallied. Down volume is the volume on a day when the price falls. Each day volume is added or subtracted from the indicator based on whether the price went higher or lower. So how this indicator works? First point is, when both price and OBV are making higher peaks and higher troughs, the upward trend is likely to continue. Second point is, when both price and OBV are making lower peaks and lower troughs, the downward trend is likely to continue. Third point is, during a trading range, if the OBV is rising, accumulation may be taking place, a warning of an upward breakout. Fourth point is, when price continues to make lower troughs and OBV fails to make lower troughs, the downward trend is likely to stall or fail. This is called a positive divergence. Calculation of on-balance volume. These are the 3 formula that are used for calculating OBV. Let's take an example of how on-balance volume is work. Below is a list of 10 days worth of a hypothetical stock's closing price and volume. Day 1. Closing price equals $10, volume equals 25,200 shares. Day 2. Closing price equals $10.15, volume equals 30,000 shares. Day 3. Closing price equals $10.17, volume equals 25,600 shares. Day 4. Closing price equals $10.13, volume equals 32,000 shares. Until day 10 it is following, as you can see in screen. How to calculate it? As can be seen, days 2, 3, 6, 7 and 9 are up days, so these trading volumes are added to the OBV. Days 4, 5 and 10 are down days, so these trading volumes are subtracted from the OBV. On day 8, no changes are made to the OBV since the closing price did not change. Given the days, the OBV for each of the 10 days is: Day 1 OBV equals 0. Day 2 OBV equals 0 plus 30,000 equals 30,000. Day 3 OBV equals 30,000 plus 25,600 equals 55,600. Day 4 OBV equals 55,600 32,000 equals 23,600. Until 10 days you can see the calculation of on-balance volume. I hope you understand. Second indicator is Arun indicator. The Arun indicator is a technical indicator that is used to identify trend changes in the price of an asset, as well as the strength of that trend. In essence, the indicator measures the time between highs and the time between lows over a time period. The idea is that strong uptrends will regularly see new highs, and strong downtrends will regularly see new lows. The indicator signals when this is happening, and when it isn't. The indicator consists of the Arun up line, which measures the strength of the uptrend, and the Arun down line, which measures the strength of the downtrend. This are the formula used for calculating Arun. So how to calculate it? Let's take an example. The following chart shows an example of the Arun indicator and how it can be interpreted. In the chart above, there is both the Arun indicator and an oscillator that combines both lines into a single reading of between 100 and -100. The crossover of the Arun up and Arun down indicated a reversal in the trend. While the index was trending, prior to the reversal, the Arun down remained very low, suggesting that the index had a bullish bias. Despite the rally on the far right, the Arun indicator hasn't shown a bullish bias yet. This is because the price rebounded so quickly that it hasn't made a new high in the last 25 periods, despite the rally. I hope you understand. Next step we will discuss in part 2. Till then bye, and don't forget to subscribe.